Good morning, everyone, and welcome to our apartment presentation today. We wanted to take a moment to let you know that our hosts today are American Title Service Agency, which is me, Helena, Old Republic Exchange, and West USA Commercial. The overall presentation today has approximately 50 slides, and we will be sending those to you and the entire presentation to everyone that's registered today. So if some of the print is a bit small and it's not coming through on your computer, don't worry, we'll be sending that over to you. And at the end of the presentation, we will have a Q&A. So any questions, if you would please submit them via the chat option. We will be addressing those at the end of the presentation. And if you would, please to make sure that your microphones are on mute. That would be wonderful. And to begin, I would like to introduce the president of American Title Service Agency, Jim Thomas.
Good morning, everyone, and thank you for attending this Zoom meeting. It's our privilege to be host, and I just want to let you know that I work with some of the best people in the industry as far as title, escrow, and marketing people, of which Helena is one that works with our commercial manager in closing transactions for our clients and hopefully for you. We want to be able to offer you some tools as far as whether you're thinking about purchasing or selling an apartment building or representing clients that would be doing those things. Brian, who is controlling this entire meeting for us today, is the head of our ownership department, and he and Helena work closely with our commercial clients in putting together search engines. For example, if it's an apartment building, they can put together a target area for you or for your clients as far as zip code, loan type, or ownership information that you can use to target in on a particular area for your clients. Helena can talk more about that after Jim's presentation as far as in the question and answer section.
With Neon Capital.
If you have any of those questions, if you can hold those to the end, I'm sure she can talk to you a little bit about that if you have specific questions. And Tanya Whitney is very, very familiar with apartment transfers and all the additional things that it takes in order to properly transfer as far as rent rolls, laundry units, things of that nature, because we've had those things come up in the past, and she just does a phenomenal job. So if anybody is in need, we have the people in place, and just want to again thank everyone for being a part of this, and I'm going to turn it back over to Helena.
Thank you, Mr. Thomas. And we just wanted to let you know if you have any questions about research and property research, just please send a quick note for us and we can answer those questions at the end of the presentation. And again, any questions can go through our chat bar. And with that, I would like to take a moment to introduce Jim Caston, who will be giving the presentation today. And Mr. Caston is a CCIM. He received a master's degree in geology in 1975 from the University of New Mexico, and has conducted worldwide mineral exploration for major mining companies. He has owned the commercial real estate firm Caston Long and the Caston Long Commercial Group, for actually a little over I think 22 years, and has recently joined West USA Commercial. So we are very pleased to introduce a gentleman who has brokered and helped to broker more than 1,200 apartment communities in excess of $51 billion in value to our presentation. So Mr. Caston, thank you.
Thanks, Helena. Good morning, everybody. Thank you for being here. It was an interesting night last night. If you're local in our area, we had a huge storm go through, and any of the trees that weren't blown down a couple weeks ago, they're now down. It's a big cleanup time right now. Before we get into the presentation, I want to acknowledge West USA, which is the company that I joined here last fall with my partner Chris, and it's been a great resource for us. They do all the back office work. They're also probably the largest residential brokerage in Metro Phoenix, something like 3,000 agents, and also a fair-sized commercial division, and they handle all disciplines. So they've been a good folks. interesting thing. So, and maybe some of you folks have been doing real estate for a while. I remember going to the Biltmore in about 2006. There was a symposium. I don't know if it's SRP or CCIM type things, and every speaker talked about the market. And you walked out of the symposium thinking, boy, it's really blue sky. There's nothing that's going to derail our economy. 2007, residential kind of started to fall apart. 2008, September 15, Lehman Brothers declares bankruptcy. So maybe there was some clouds on the horizon that they weren't aware of. So the third host of today is Old Republic Exchange, Sheila Long, the Vice President and Marketing, Regional Marketing Director. We'll talk about what they do and also maybe hint at maybe some of the clouds that might be appearing on the horizon today. Sheila.
Great, thanks, Jim. Thanks, Helena and team. It's great to be here. My name is Sheila Long. I'm here locally in Arizona, but I cover the Southwest mountain states and half of California. And yes, I'm the regional executive. I just want to start by letting you know what we are and what we do. So we're what's called a qualified intermediary. I think this is important for you to know. So as I dive into some of the tax changes that are coming, you understand what our role is in a transaction. Anytime you have a client that's selling investment held property, right, land, commercial or residential, that's not their primary home, in order for them to protect their equity and not pay taxes, they need to perform a 1031 exchange. We coordinate directly with your clients, real estate agents, tax and legal advisors, and most important, we hold the proceeds so that the seller, the taxpayer, does not have constructive receipt of funds. Why Helena and I work so well together is because a lot of your clients don't realize that escrow is not a qualified intermediary, and there must be one in between every transaction. With that being said, what is a 1031 exchange? Just real briefly, we'll put it up on the screen. 1031 exchange again is for the investment held property, right? Investment held property is what we're discussing today, okay? Anytime, again, they have any equity, the number one reason why anyone would perform an exchange is because capital gains are so substantial. I want to show you what capital gains currently are right now and what the proposed changes may happen come next 2022. Great, here we go. Current capital gains right now, we're taxed on the federal, right? You see here in this top bullet point, we're taxed on the federal, we're taxed on state, we're taxed if our income is in the higher tax bracket, which you see down here, this 3% Medicare surtax, and we're taxed on depreciation recapture. Currently, as of today's date, the highest capital gains tax rate can get up to 23.8% on the federal. That's the current. I do want you guys to be aware of that because there are some potential changes that are coming and what I'd like to address today. As of last Wednesday, August 11th, the Senate approved to move forward, moving this proposal to the House. I do want to show this to you. I think it's important for you agents to know what and why our market is driving. So it's what's really driving our market is this fear of potential capital gains rate. So on this top right here, I want you to notice that they're talking about increasing just the top tax bracket, okay? Just the most income. If you look right here, 452 and change for singles, okay? All the way down to 509 and change for joint filers. They want to take, that's the only one that is going to be touched, the only tax bracket. They are wanting to increase that from 37 back to 39.6%, okay? That's the only one. They did preserve and say no one under this threshold will be affected. But what I want to talk to you about today is what's going to happen to our long-term capital gains tax. With this being said, remember I mentioned in our last slide, the highest potential federal capital gains tax rate is 23.8%. If this increase happens, what will occur is that there is a potential of that new tax rate hitting 43.4%. With that being said, how does this affect our economy with our exchanges, right? And our commercial clients that are in these higher tax brackets, right? They're going from a 23.8% to that almost 44%. Now,
hey, can I ask a question? Oh, I'm sorry to interrupt you, but these taxes that go up, doesn't it have to do with what country or state you're domiciled in, or it doesn't matter?
Well, we're talking about the US tax changes on capital gains and who will be affected by it. And this is just in the proposal for the 2022. It hasn't been passed yet. Do you understand? Let's wait for the September 15th deadline that's going to happen. But it hasn't passed the Senate. And with that being said, on here, what's happening is they're talking about limiting the 1031 exchange. I do have good news, though, of what is happening. There was a verbal, unanimously approved resolution to preserve the 1031 exchange, because this is what was proposed here, that they wanted to limit the exchanges and this preferred treatment. So again, it can still change, but it was an unanimous resolution to preserve the 1031 tax deferred exchange. With that being said, I just want to let you know I'm here. I'll be here until the end to answer any questions. My information's up here on the screen. If you have anything, you have more that you want to know about, happy to share with you my resources and give credit to taxfoundation.org. So thank you guys so much, and I'll be here till the end.
Thank you, Sheila. Okay, so this is, so I have a little group. I work with Chris. We formed this Metro Phoenix Commercial. It's under West USA, and it's a growing company. These are the 4 members of the company with the contact information. You don't need to read this. This is the bio on myself and Chris, and those will be the speakers today. So here's the outline. Primarily, we're going to talk about the fact it's a great market. We're in a great location. We're on fire. We're leading the U.S. in the apartment stuff. It's just a great place to be in with the apartments. But we're also going to talk about then some of the clouds that are coming in, and then talk about maybe some of the opportunities that exist today, and then the future concerns. Thank you. So this is the place to be right now if you're in the apartment market. Phoenix, Arizona. We lead the United States in rent growth in the past 12 months. 17%. 17% rent growth in the last 12 months. Just unbelievable. Vacancy rate, less than 4%. This is unheard of numbers. And we were happy we got down to like 5% for 4 or 5 years. Now we're even less than that. Cap rates suppressed to 4.5%. That's great for owners selling, but we're also higher than what's in California. So cap rates in California 2 and 3%. We're now blessed with the fact we've got a better return for buyers. So buyers are coming over to Arizona and leaving California for a number of reasons. And then our gross volume in sales the last quarter, another record-setting quarter. So what's driving our low vacancy and record-setting rental rate growth? It's pretty easy. Low supply, high demand. So what's driving the demand? It's always people. It's always population. What's driving our population? Let's go, Brian. Population centers, growth centers. You can see Western U.S., not the borders of California where all the Democrats, are. Texas and the Southeast. So where are the population, where are the folks coming from? They're coming into our state. Not only for commercial, but for residential. They're coming out of California. They're also coming from the northern states as well, but a lot coming from California. Now, again, you don't need to read all these slides. You'll have these at the end of the presentation, so you can read these things. But one of the things that drives our market is the fact we have lots of jobs. We're currently ranked number 2 in the U.S. for labor markets. One of the things that we didn't have some years ago was a diversified economy. We now have that. And I want to give credit to Michael Crow, who is the president of ASU, that took over, I think in about 2002 or 2004. He'd been a consultant for ASU for a couple of years, then came on as president. And he went to the Board of Regents, or whatever the organization is that controls our state universities, and said, what am I able to do with ASU? And they said, you can do anything you want to do. You just can't ask us for any money. So he went to the companies in the area and companies in California and other states and said, guys, what would you like to see as a university here that we can help you for getting you to stay in our area or to grow in our area? And they went to him and said, we need people graduating from ASU and other universities that will be able to take positions in our companies. So with company support and help, he was able to grow companies and therefore population centers in our area. So factors that are bringing people into US. We have affordable housing. I know it's going up. We'll talk about that in a second. We have higher cap rates, as I mentioned, in California. We have much less government regulations. The number of people talk to that are investors that are coming to our area are coming from California. We have a lower overall tax rate, favorable business climate. Thank you for the development, economic development people. Plenty of water. If you have any questions about water, again, former geologist, SRP has been controlling and monitoring our water resources, the groundwater, the lakes, the rivers, the dams in our state for over 100 years. They do a great job. We have plenty of water. Strong infrastructure, 365-day airport. Lots of things that bring folks into our community. So new apartment construction. Last year, 42 projects, almost 9,000 units completed. This year, the projection is 87 projects with plus or minus 17,000 projects, with 12,000 scheduled for completion in the next couple quarters, third and fourth quarter of this year. So if you look at the chart on the right, the middle column, you can see the number of units constructed. I'm going back to maybe 2015 and for yeah, so you go 5,000, 8,000, 6,000, 8,000, 9,000, 8,000. Keep that in mind. So typically 8,000 or 9,000 units per year. So right now, under construction, we've got 32,000. So what's interesting, and this is we have this map on our website, metrophoenixcommercial.com, and it shows the under construction plan and prospective apartments. But what's interesting, 4 or 5 years ago, when the apartment started to be built, the big boom in apartment construction, they were centered in Phoenix, Tempe, Mesa, Gilbert, Chandler, right around those city centers. But now you can see the apartments are dispersed all over the valley. And what's happened is the rents in the city areas have pushed people out into the suburbs. And so now the rents have increased enough in the suburbs for builders to be able to build. So that's why you see a dispersed area of construction. So folks talk about, are we overbuilding? We have estimated population in Phoenix, 5 million people. By the way, Phoenix just ranked number 5 in the U.S. for largest city. Anyway, so approximately ballpark 96,000 folks per year coming into Metro Phoenix. Keep that number in mind. Let's see if you can follow my math here. If you have 96,000 people coming in per year, and these are rough numbers. They're not correct numbers. They're just a ballpark number. If you say 30% of the people, the population live in apartments, maybe 2 people per apartment, you need about 14,000 new apartments per year. Is that a correct number? No, but it's a ballpark number. Again, we've had, 8,000 or 9,000 units completed per year, and the forecast is for this next bit for 2021 to have maybe double that. So there's going to be some pressure put on the new construction in the last part of this year and going into the spring of next year. That will be absorbed, but there'll be some reduction in rents or concessions offered, because when builders build, they have a construction loan. They want to get folks in there. They want to get the temporary loan in there. So they want to have the folks in there. So there'll be a little bit of reduction in the rents. Okay, so we'll talk about rental rate growth. Again, when you have such low vacancy, 3.6%, there are tenants standing in line, essentially, waiting to get in. There's no place for them to find. So it's easy for the owners to push rents up, and that's exactly why the rental rate growth has been going up. Again, one of these slides that you can't read, but you'll have it. The nice thing here, we are in the top 1, 2, or 3 in rent growth in the United States. It's led actually in Phoenix. We're number 1 in the country for tenants by necessity, which would be the teachers, the firemen, the folks that are on somewhat of a fixed income. And you'll have those slides when we get done. Rent growth leads the United States. Leading the United States, 17% rent growth. I mean, this is we're the place to be. Okay, so this is an interesting slide. I'm going to spend just a moment here. So this is the history of sales, 10 units and above. This data is from CoStar. So this past quarter, quarter two, 2021, we have 2.57 billion gross volume. What's interesting, so we had 107 individual sales. So essentially that's 107 owners that have decided to sell. So in the last couple of weeks, I did a fun thing. I called a bunch of the owners that sold their apartments. And I said, John, good job on selling your apartments. You know, good luck. And can I ask you a question? What was the driving force? Why did you sell when we've got this huge rent growth? And almost everyone that I talked to, and there was a bunch, said we just thought it was time to sell. We see some problems coming out in the future with tax increases, inflation, things like that. They were spot on and say, you know, we're top of the market. If the market goes stronger next year, we're not going to look back on making a profit, but we know we've got we can harvest our equity now with by selling. So that was interesting, and almost everybody I talked to had that same comment. So here's that same 2.57 billion. You can see record-setting gross volume in sales. Again, this CoStar data, probably 10 units and above here. Who knows what the third quarter is going to be? Probably even set a higher mark. The interesting thing also about the CoStar data here, the projection on price per unit and vacancy. Vacancy will go, actually next slide will show vacancy, but this slide shows a continued increase in sales price per square foot going forward. Here's the vacancy, and again, CoStar data. We follow the stabilized vacancy is the blue line at the bottom. We were at 3.5, 3.6% second quarter. So they project over the next 3 years, you know, we'll get all the way up to 4.5% vacancy. That's still great, and you'll see rental rates continue because of that low vacancy. So are cap rates important? It's a question that I get often, and I would say yes and no. The no is for folks that are buying properties for repositioning. I don't really care, and I don't think they care what the vacancy rate is. They want to see what they can do for repositioning the property, changing the mix or changing the quality of the unit from, say, getting $1,000 a month rent up to $2,000 a month rent, and then what the value of that property is going to be and backing out the value. So they don't really care about the cap rates to start. The yes, though, is if you're buying a property that's stabilized or it's been repositioned and stabilized or newer, you want to know what the cap rate is because you don't have an ability to reposition that asset. So that cap rates are important there. Again, our cap rates are stronger than California, so that's driving a lot of people to change their positions from California here. So I'm going to turn the presentation over for a few minutes to Chris Norton, my partner, to talk about what's going on in downtown Phoenix. And downtown Phoenix is a driving force for a lot of the outlying areas and what's happening with rent growth. Chris.
Thank you, Jim. So yes, if anybody who's been to downtown recently has probably noticed a lot of construction underway. And very recently, there were as many as 14 cranes in the sky at one time. That's a record. Christine Mackey, the Economic Development Director of the City of Phoenix, pointed that out quite astutely. It's a kind of a source of pride that the Economic Development team has done a lot to bring jobs to the downtown core, and so as are the universities. So I want to talk about what's driving that construction. I want to talk about what is going to be opportunities for your investor in the surrounding areas because of what's happening downtown. This is a heat map showing where people live who work downtown. This is from the Maricopa Association of Governments. And as I said, Christine Mackey was quoted recently in the Phoenix Business Journal. She pointed out, hey, people are coming here now to find high-tech jobs and a great quality of life and a cost of living. You know, things are going up and inflation is rising, but still compared to other cities where people are migrating from, this is a very attractive lower cost of living. So in the arrow, you can see I've highlighted a very small region. It is called the Downtown Job Center. That's basically from Buckeye Road to McDowell, as defined by MAG, Maricopa Association of Governments. And I'm going to be talking about that area as well as just slightly to the north of the south part of Midtown, collectively between these two job centers, there are over 80,000 jobs, over 1,700 employers. And downtown has 3 strong universities. ASU alone has 11,000 students. You can see the numbers on the screen here. But the key point I wanted to make here is that of all these people working downtown, by the way, this number of 88,000 is actually higher than just what you see on the screen, because I consider downtown to still include some portions east of 7th Street into down Van Buren. And this does not take into account the Capitol Mall area where you find the state and local governments, City of Phoenix, as well as the state governments. There's a ton of jobs in the Capitol Mall as well. So when you look at all of these jobs and look at some of the numbers of where these people live, it's amazing that only 1.8% of all those people working in downtown Phoenix actually live downtown. That creates a tremendous opportunity in my mind for an investor to provide apartments and housing in the surrounding areas at a more attractive, more affordable rental rate. That does not necessarily mean a below market discount, but that has a knock-on effect of creating a wave of opportunity. A rising tide floats all boats, as they say. So the surrounding areas, as outlined here, I just did a sort of a heat map of my own. I pulled up rental rates. This is from Yardi Matrix. This comes from apartments that are surveyed with 50 units or more, so it doesn't necessarily capture some of the smaller product, but it does give a good thermometer about the rental rates of professionally managed assets in the area. And you can see quite clearly what's more expensive, what's 12 to 24% cheaper is in the yellow, and in the green is 25% or more cheaper. It's pretty clear. If you're an investor looking for opportunities, you can go further west, you can go further north. Again, if you recall that heat map, you saw a whoosh of darker blue where there's more density of people living in that area that go north and go west. So again, I just gave you a small sample area, but the trend continues in those areas. This is currently what's in the construction pipeline. This is kind of just zooming in on the apartment construction map Jim shared earlier. This shows just downtown between the 7s from the warehouse district to Willetta, which is just a small street slightly north of the I-10. Willetta is actually right on the north border of Hance Park. So this is what's under construction, is in green, meaning a permit's been issued. What's in yellow is planned, meaning the developer's begun planning, and prospective is the rest, meaning that they've announced their intention to build something, but not yet begun planning. I'll end it with this, kind of showing the numbers for construction. Again, it's an explosion. From the last 10 years, just 4,400 apartments were built and delivered. And look what we have in the pipeline today. We have nearly that many that are currently under construction. We have half as many that are in the planning stages. It's staggering. So again, this is driving per square foot rents on the average to $2.09, and some areas much higher. To tackle some affordability, some developers are building micro units, 250 square feet to 400 square feet, where the price per square foot is astronomical, but the overall monthly rent is more in the reach of somebody who's a single professional or a college student that wants to get out of a dormitory or student housing situation. So I'll kind of end it on that note. Again, the construction is kind of driving the surrounding area to provide alternate options to the pricier new construction downtown. With that, I'll turn it back to Jim.
Thanks, Chris. So if folks don't know Chris, he lives downtown. He lives and breathes downtown. He knows all the little haunts, the bars, the restaurants, and just knows downtown Phoenix. So if you have any questions about anything going on in downtown, Chris is a great resource. The other quote that we saw from Christine Mackey, the Economic Development Director for the City of Phoenix, is a great gal, said in a comment also that 10 years ago, she would have never thought there'd be so many people that were going to live and work downtown. So again, it's not only the apartment market that is doing great, the housing market, and everybody that's in Phoenix knows the housing market. And if you own property here, in the last year, you went up 30% in value. 30% in value. These are staggering numbers. It's just unheard of numbers. Median price of a home was up 29.5. Average sale price of a home up 28.3. Average sale price of a home up 32.1%. These are these are amazing numbers, but there's caution. So one of the things, and I've had a nice conversation with Michael Orr here over the weekend, this past weekend, and Tina Tambor, who works with the Cromford Report, also used to be a member of American Title. Was it
Capital Title.
Capital Title, the predecessor for American, maybe I shouldn't say that.
That's okay.
Pretty much. They put out this, it's a public thing, you can go on the Cromford Report, cromfordreport.com, and get this little snapshot. And the thing to maybe look at here is the supply index. We were down maybe 5 or 6, 8,000 units for sale. We're now up to over 20,000, maybe 23, 24. So the supply of product is increasing. So the demand is also easing. So we're having a little bit of a softening of the market, of the residential market. Remember that residential precedes the slower moving commercial market. So this is a good thermometer to watch as we go into the next quarters and year. Thank you, Brian. So in the short term, the increased house values will make it more difficult for tenants to leave an apartment building and purchase. We're also having the housing market increase their rental rates. So if your tenants by desire, because of the rental rates going up in houses, the rental rates will continue to go up in apartments. But again, watch the residential market softening. Okay, so two last slides here. They're going to be a little lengthy in talk, but I think they're worth talking about. Again, you'll have these to go through, and we can answer questions on any of these in the entire presentation here when we get done. So one of the opportunities, repositioning existing apartments, that's always the big winner. We've been doing that for 3 or 4 or 5 years. Buy a property for 100 a door, put in 20 or 30, sell for 200 a door all day long. The problem is finding those are a little more difficult to find these days. Look for areas. Where do you want to build or talk about investing for repositioning? Fringe areas. I love the Sunny Slope area. It's adjacent to higher dollar stuff. Along transportation routes, especially the light rail, where you can have higher density building. An area between South Scottsdale and Tempe, which is that disaster industrial county island just north of Tempe Dam Lake. A third of it on the east side was recently taken over by Tempe, and now there's 300 or 400 apartments being built there. Tempe will eventually grab the rest of that county island over the next few years. So anything surrounding that is going to go up significantly in value. We've seen downtown Chandler, Gilbert, Glendale areas be a good area to invest and increase in value, especially, and also downtown Mesa with their universities. The West Valley, Buckeye, fastest growing city in the U.S. Goodyear in the top 10 fastest growing cities. The population of Metro Phoenix is going west, a little bit also to the southeast, but lots of land to go to the west. So again, this is one of the heat maps for where job centers are. And so you look at, take a look at the 101 and the I-17 Deer Valley area, good area for jobs. You connect that with downtown Phoenix. I think anything between those two is a great area for investing. I would say today, maybe stay east of the 17. But shortly, we're going to go west of the 17 as the population looks for a little less expensive housing, and the west side of I-17 is going to get stronger. All right, so this is my last slide, essentially. So I went to dinner. Not that you care much, but I went to dinner last Saturday night at the Village Inn, Gainey Ranch, and had a pretty good dinner. The shrimp cocktail was a little soft shrimp, and service was not great. I talked to one of the managers at the end of the time, and he said just the quality of the food that they order is not what they expect, and it's just hit and miss across the board. But the most important thing was, he said, over the last 6 weeks, the cost of him buying meat to serve had gone up 20% in the last 6 weeks. So I'm going to say that because as we have the restrictions on oil leasing, pipelines, things like that, price of oil is going to continue to go up. Everything that we get, produce and things, is transported by trucks, something using petroleum. As petroleum prices go up, our food prices, everything we get is going to go up. That's going to impact not only inflation, but the folks that don't have a lot of money that are having to buy food and things like that. Their cost of living is going to go higher. Again, you've got no B and C product being built. Their rental rates are going up. They're being forced out of their apartments. They're going to have more money. They're going to have to pay more money for their basic things. It's going to be an issue. Mortgage interest rates are going to go up. Proposed higher taxes. Sheila mentioned that. A perception that we are getting overbuilt. That happened in 2007. That slowed our market. Affordable housing, again, tenants by necessity. What are we going to do? At some point, we're going to have to address that. Sheila mentioned changes to 1031 tax deferred exchanges. And one of the big unknowns, and it's a political thing, and you have no idea what's going on, is the increasing COVID variants. A couple 100,000 coming across the southern border per month. Something's got to happen with us, guys. We've been on an uptick, a strong uptick since 2010. That's the longest continuous uptick in decades for growth in the multifamily market. And again, commercial follows residential. Right now, we'll be fine. This year, we'll be fine. There'll be some pressure on the higher end apartments that are coming online. But the big thing to be concerned about are what I've noted as tomorrow's concerns. Watch the residential market, see what that's going to do. Next, Brian. So that's the presentation. So the next couple slides, and you'll have copies of this. These are useful resources, data centers, title companies, Old Republic Exchange, a lot of the places where we get our data, GPEC Mag, Brew, Department of Real Estate, Phoenix Business Journal, all those kind of things. Next slide, please. And Chris put this together, kind of a list of all the economic development folks and their contact information. Next, Bryce. And this is a little bit of the things that American Title offers, their different resources. And I would invite you to contact Helena for everything that American Title does for investors, for owners. It's a great resource. And just one thing I want to mention is one of the reasons that I've used American Title for a long time is not only their service and people like Helena and their great commercial escrow folks, but Jim Thomas is a great resource. He has a balance between knowing how to handle an escrow when you get into tight situations, and I've gone to him when needed, and he's counseled me when needed, how to protect the agent and the escrow so it's a smooth escrow. And so I've appreciated their work and Jim's help when I've needed it. We turn this back over to Helena, and then we'll open the presentation for Q&A, and appreciate everybody that's been online.
Nice job, Jim.
Thank you, Jim.
Okay. And Chris.
Brian, will we be able to see the questions up on the screen?
Yeah, we will.
So I know there were a few questions that came up, and we do want to thank everyone for being here today. And then on behalf of American Title Service Agency, Old Republic 1031 Exchange, and Jim Caston with West USA Commercial, we truly appreciate you being here today. And thank you, Mr. Thomas. But we did have a few questions that came up, so let's see. Brian's going to put those up. Thank you, Jim.
All right, so we have, what rent rates would you consider now considered affordable, and what would you consider luxury?
So, good question. The luxury, so when a builder looks to build, they need a certain return, and they need to see probably from $1.80 to $2.20, $2.30 per square foot for units. So that would be the kind of a price per square foot for the luxury. Affordable, that's a strange word. What the hell does affordable mean? Affordable to one is not affordable to others. There's tax incentives, there's bonds incentives that have somewhat of a percentage of the complex has to be affordable. You know, to quote a number, if you can probably get $1.50, $1.30, $1.40, that's probably more affordable than others. But it's really, the luxury stuff is going to set the tone, and anything you get less than that I just feel sorry for the folks that are being displaced from their units when people, when owners jack up the rents, because that's the market.
Good morning, everybody. Jean-Michel Ellery, Rosslyn Sotheby's Private Client Group. With Frank Azami, I would like to know, where do you see this rental market going in the next 5 years?
The rental market, where's the rental market going to go in the next 5 years? We're having good technical issues here. You've seen some of the projections that I had up from CoStar, where it looks like the vacancy rates will stay down, which means owners will have the ability to continue to push rents. I think on the units that are tenants that they want to live in apartments, they have the money to spend, those rents will continue to go up. I'm concerned about the units tenants by necessity, that those rents at some point have to level off. You can't continue to increase rents on those folks. They just don't have the money. So on the higher end stuff, I see rents going up. On the middle range and lower, I see them kind of leveling off. I think it has to be that way.
A lot of displacement, I would add. A lot of those folks are going to be displaced.
Yeah, so
so there'll be a shift of where people live over time as these rental rates.
And that brings up a good point. So people that are living in the Central Corridor, in Tempe, and Scottsdale, and Central Phoenix, where are they going to go? They have a couple of choices. One is they can have more of their fronts double up, so maybe 2 bedroom units might go up in value more than single levels. Single units. You can see a shift of folks going to the west of I-17. I love the Grand Canyon area, Grand Canyon University area, that area, and farther into Glendale, South Phoenix, along maybe the light rail going down there in that area. They're going to have to go somewhere that they can afford rent.
A question, Flint Crump here. Anyone hear me? Go ahead. Let's go ahead. Okay. I was curious to know, of the sales, apartment sales that have happened, what factor the eviction moratoriums were having on those sellers, those owners of the apartments, in as much as even the CDC now has taken liberty to extend the moratorium of evictions. And part two of that question would be, when you saw those sales of the apartment, complexes, what percentage on the rent rolls showed tenants actually continuing to pay despite the eviction moratorium?
So great question. So it'll be interesting to see what happens with the eviction moratorium as we go forward. Right. So one thing, and I'm trying not to be political, but I'm sorry I am. They're going to continue to have the moratorium go forward because there's lots of tenants out there that will appreciate that. There's far more number of tenants than there are owners. So that's where they're going to get the votes, by helping the people that don't have much money. Sorry, it's my Trump hat. So it was in a meeting a couple of weeks ago, and Amy from CalCap was talking about what they're doing with the properties that they manage. And what they're doing with most of their tenants is trying to get them on a program now, so that when the eviction moratorium is lifted, those tenants will be in that tough a position. So they're already working with that. So and most of the good managers are doing the same as individual owners are doing the same. So I don't think it's going to be that much of an impact when the moratorium is lifted, but that's just from talking to managers and the fact that they're working with a number of their tenants, being very proactive now in anticipation of that. The question about the idea of how does that impact the apartment sales, maybe 5 or 10, 15% of the tenants are in arrears, but the fact that the owners or managers are working with those tenants now has been minimal effect on the value being purchased and the price being purchased for those apartments.
Okay, so only 15% were non-payers. So my takeaway is only 15% were non-payers at these transactions.
Well, I wouldn't say non-payers, but people that were struggling and doing on some sort of a payment plan, something of that nature, I think across the board. And I've seen 20% when Yardi has presented those kind of data for apartments across the US.
Thank you.
Do we have any more questions from anyone, or?
I have another one.
I have a question.
Thank you, Ray.
Oh, go ahead. Yeah, I threw it in the chat, but I can do it verbally. First, thank you for sharing your research and your data. Really appreciate that. So thank you for bringing everyone together to do that. My question is about water. How will water availability impact your forecasts and your predictions?
How will water availability impact
Forecast.
Your forecasts
Sure.
and
Sure. Where SRP has water, which is a great portion of Metro Phoenix, but maybe not so much down into the county to the south, we'll be fine. SRP has a lot of water in the valley, more than people.
What is SRP?
realize.
I'm new here. I just moved here 9 months ago, so I don't know what SRP is.
Oh, sorry. So there's two utility companies, and thanks for the clarification. There's two utility companies serving the valley, APS and SRP. SRP has for 100 years watched over the groundwater that backed up the lakes, the rivers, Lake Roosevelt, those kind of things. And they've done a great job. We have a lot of water as an aquifer below the city. And actually the drainage of flow of water that's coming into our area comes all the way from Prescott, Flagstaff, the White Mountains. And it's a huge drainage area that comes down through the Verde River and the Salt River that comes into our valley. That's why Phoenix is here. That's why the Hohokam Indians were here. That's why we've had a lot of orange and grapefruit and fruit trees here for a long time. It's because we have plenty of water. The CAP, which is controlled mostly by APS, gets water from the Colorado River. And as you can see, the drawdowns in Lake Powell and Lake Mead, those reservoirs need to be replenished, and we have been taking too much water from the CAP for our percentage coming into Arizona, so that will be restricted. So some of the valleys outlined, valleys like the Arcohela Valley, they'll be restricted, and some of the farms out there will be out of water. But to answer your question about growth, I think we're fine. Plenty of water to stay kind of in the metro area, not too far out, and we'll be fine.
We also have a question on opinion on Tucson.
Yes, I'm thinking.
I like Tucson. They have better Mexican food than we do. I've always liked Tucson. I actually worked for a mining company out of Tucson. I love Tucson. Metro Phoenix is probably, Jim, maybe you can help me on this. The percentage of the economy for overall Arizona is at least 75% Metro Phoenix, maybe more. So Tucson is a stepchild to Metro Phoenix. People in Tucson wouldn't like to have to say that, but their economy is a little less than ours. But what happens in Phoenix, Tucson follows, so their rental rates are going up, but they're not going up as fast as they are in Phoenix. I think it's a good growth area, a little restricted maybe in size for where they can expand to. I like Tucson.
They're more university driven than the Metro Phoenix area, I think, for the most part, because of the U of A and some other, they have some other new manufacturing opportunities. It's not all the way down to Tucson, but certainly the plants that are going to spring up in Pinal County with the, is it Nicholas that's going to be building a factory in Casa Grande to build trucks and electric vehicles. I think that's going to be a great market, not only for residential, but also for apartments. With all the people coming in, the jobs that are going to be created by
So the economy in Tucson is growing. So there's opportunities, getting more diversified jobs create population lives in apartments, so. yeah. Say that again?
Clarification on water, plenty of water, when most news points to future shortages.
I think it's a great question. There was a news article that came out in the Guardian a couple of years ago. If I can remember the quote, something like Metro Phoenix, the fastest growing city that about to run underwater. It's just not true. It's very political. And if you're in Texas, you're the economic development people in Texas, and you want to get companies from California to come to Texas and not stop in Arizona, you're going to put out PR like that. It's just, we have plenty of water. Now, should we conserve water? We're in the desert, absolutely we should. And I can see more of those things being imposed on car wash and things of that nature. But if you have specific questions on that, email me. We had a few years ago, we had a presentation at an event at Caston, and we had a lady that was in charge of SRP, their senior water analyst, give a presentation. Colette Moore really gives you an understanding of what the water situation is like for Metro Phoenix. And so send me an email. I'll send you a link to that presentation. That'll help you understand those things. But great question.
I would add one other thing to what Jim just said, as far as those articles that talk about those things. If you want to know about minerals and water, you should talk to a geologist, not the media. So the same thing with infectious disease and things of that nature. We really should be concentrating on our own personal positions and things of that nature versus what's going on, because things sure have seemed to change, but you really want to consider the source when you're going with those things. Go with people that are qualified to give those opinions.
Can I ask another add to that water concern? Flint Crump here. So the Colorado River has water rights mostly for Arizona, and we actually have so much water in Arizona that we sell water rights to Southern California to help supply them. So I don't know where that's coming from, but we have, to back you up, we have plenty of water.
Okay, good. And anybody who has, listen, so years ago, I got out of grad school and I actually came to Phoenix and I tried to buy a hydrology company. I thought that would be a thing of the future. And I almost had the person set up so I could buy the company, and then it didn't work. And then I went into mineral exploration. But I love to talk water, I love to talk geology. Let's do it offline. Call me, email me. We can talk all day about water. Love the subject. So let me add, as long as we're still here, for the few people that are still here, one thing I did not talk about, and I don't know the exact impact, are the single-family homes that are being built to rent. That's a growing field. I know Angela Gonzalez with the Phoenix Business Journal has had 4 or 5 articles on that. I will continue to monitor that and see where that goes and the impact on the housing market for residential and apartments. So if there's concerns about that or interest in that, also email me and I'll keep you abreast of those things. We are watching those big developments.
Good.
Anything else, Brian? Any written questions?
I believe that's all. I believe we're good.
All right, guys. So Helena, thank you. Jim, thank you for being here. Brian, thank you for putting together this. Guys, thanks for hanging on. And again, we love providing data for people that are interested in the apartment market. Happy to entertain other questions offline. This is what we do. I've been doing this for 20 years. So thank you guys. Have a good day. Stay dry.
Hopefully we'll see
Thanks,
you in
everyone.
October.